The financial statements required shall include I. Statement of accounting policies. II. The balance sheet as at the last day of the company's financial year. III. A profit and loss account or an income and expenditure account for the year. IV. Notes to the accounts. V. The auditor's report. VI. The director's report. VII. The audit committee's report. VII. Cash flow statement. X. A value added statement for the year. X. A 5-year financial summary, and XI in the case of a holding company, the group financial statements. Balance sheet. The balance sheet and related notes should disclose the following information. A. Fixed assets, property, plant and equipment, lands freehold and leasehold, buildings, plant and equipment and other categories of assets, such as motor vehicles, fixtures and fittings, and accumulated depreciation for each class of assets. B. Long-term investments, quoted and unquoted investments in subsidiaries, investments in associated companies and other investments. C. All long-term debts including their tenure. D. Intangible assets, goodwill, patents and trademarks, deferred charges and any write-offs during the period. E. Current assets, stocks and work in progress, current portion of long-term debts, trade debts, prepayments and sundry debtors, directors' debit balances, intercompany debit balances of subsidiaries and associated companies, short-term investments including treasury bills, certificates of deposit and commercial notes, bills of exchange, foreign currency deposits for imports, deposits awaiting remittances to overseas creditors, and cash and bank balances. F. Capital and reserves, the variety of ownership interests such as deferred shares, ordinary shares, preference shares, cumulative and non-cumulative, participating and non-participating preference shares. G. Other shareholder interests indicating movements during the period by way of bonus, capital redemption reserve fund, share premium or discount, revaluation surplus, revenue and capital reserves and retained earnings. H. Liabilities, disclosure of applicable rates, repayment terms, and covenants on long-term liabilities such as secured and unsecured loans, loans from holding, subsidiary and associated companies. Current liabilities disclosing separately amounts due to holding/subsidiary and associated companies, trade creditors, other creditors, accrued expenses, dividends payable, taxation, bank loans and overdraft. 28. 3.4.3 Profit and loss account/income and expenditure account. The profit and loss account with related notes or income and expenditure account in the case of a company or organization not trading for profit should disclose the following information. A. Turnover/sales distinguishing between local and export sales. The other operating revenues, for example rental income or exchange gain. C. Other earnings, distinguishing between interest income, income from investments and other sources. D. Cost of sales. E. Gross profit. F. Selling and distribution expenses. G. Administration expenses. H. Interest charges. I. Taxes on income, and J. Abnormal or exceptional items, income items or expenditure, which although unusually, are within the normal trading activities of the business. Examples are 1. Abnormal charges for bad debts and write-offs of stocks. 2. Abnormal provision for losses on long-term contracts. 3. Most adjustments of prior year taxation provisions, and 4. Shortfalls on actuarial valuation of gratuity scheme liabilities. K. Extra, ordinary items, outside the ordinary activities of the business and expected not to recur frequently or regularly. Examples of extraordinary items are profits or losses arising from 1. The discontinuance of a significant part of a business. 2. The sale of an investment not acquired with the intention of resale. 3. Writing off intangibles, such as goodwill, because of unusual events for development during the period. And 4. The expropriation of assets. L. Profit before taxation. M. Proposed dividend. N. Profit after taxation. O. Earnings per share. P. Dividend per share.